Ladies and gentlemen, boys and girls, what time is it now? Yes! And yes, this is the DW World Equity Time. And from now onwards, every Monday morning, 9 a.m., 10 minutes is all the time you need to spend with us. And we call this the OTOP series. And OTOP stands for One Target, One Purpose. From now on, every Monday morning, we are going to share with you one very important instrument. And that could be an FX market, it could be a commodity market, it could be a stock, and it could be an ETF that comes from any exchanges around the world. And what you're going to do is, number one, like us. Number two, share with your friends and the loved one. And most importantly, subscribe to us. All right. And from there, every Monday, just log on to us, watch us, and catch us, and build your way to the happiness. OTOP is right here waiting for you. Stay tuned, and I will be right back. Hi guys, welcome back to the OTOP 33. Sang. And this is for the week 22nd March year 2021. All right, and before we go off today, I want to promise you this week I'm going to take it real short. All right, less than 10 minutes to introduce you a very potential instrument that actually works well with the fundamental and also, well, worth your attention to take a look for this coming week, which is OTOP 33. One target, one purpose. All right, let us just recap briefly on last Friday what happened. All right, on Friday, there was a date, 19 March. Dow Jones market closed with a negative of 234 points. All right, and the reason why Dow Jones resulted in the sell-off was the Federal Reserve of USA actually announced that the capital ratio among all the banks to hold the treasury bonds will expire at the end of March and will be discontinued. All right, and that actually worried a lot of traders and investors by thinking that the banks will start to sell off the treasury bonds, which will trigger a rise in the bond yields. And that's the reason why Dow Jones came off on last Friday, 19 March. So this week, all right, yes, we see there'll be a lot of volatility in the market, especially in the stock market. Well, last week in the FOMC statement, on one hand, Jerome Powell talked about no interest rate hike and rates will be kept near to zero at a very low rates through 2023. And on the other hand, they're talking about the discontinuation of the capital ratio among all the US banks. So this week, what is exactly going to happen to stock market is very much unknown, and many people will perhaps, start to have a lot of disillusion on whether to trade on blue chips or to pick on some other alternative instrument. All right, but personally, I feel that while stocks are now getting shady and very uncertain, this is exactly a good time when traders, all right, are starting to move back to gold. All right, the yellow metal, gold. Yes, why? Because gold has been well-known instrument for seeking as a safe haven and also to hedge your risk. And also when we see funds moving out from the stock market, all right, the first alternative that the funds will move into is not going to be Bitcoin, not cryptos, but gold first. All right, gold prices and silver prices. And let us take a look at the gold prices. Okay, this is the gold prices on the day chart, as you can see here. All right, it's a day chart. Last week, the market was trading gradually firmer and going up, and the EMA 4 and the 20 lines were converging on Friday, and most likely this week, I think there is a probability and a tendency to see the market crossing up and moving a bit firmer. But how high can it go? This is a big question mark. All right, a big question mark. And this is the DW World Equity Time. OTOP 33 is exactly here to explain to you where we are going. All right, on the day chart, the momentum is very near to zero and it may cross up anytime. A crossing up of the momentum above the zero line will be a beautiful signal to indicate an uptrend, which, well, I honestly don't think that it's going to be this week, probably about 2 to 3 weeks later. But this week, we will still foresee the gold prices to be trading at a firmer sentiment. Okay, how do we see that? Let's take a look at the 4-hour chart. Okay, if you look at this 4-hour chart right from this bottom here, okay, that was on the date 8th of March this year, all right, earlier this month, which the bottom was 1,676 US dollars, 1676. The market has begun to turn up. And what we're going to do here is I'm going to show you a very simple trend line, which I think it will take no rocket scientist to understand and see where the market will go up. All right, this week, very simple. If we look at this trend itself, all right, on the trend, if the prices happen to fall back and break below 1730, all right, 1,730 US dollars per ounce, yes, then there are a lot of reasons to believe that the gold prices will be turning down. But if not, okay, if the market is able to stay above this current level, especially 1730, 1740, and continue to move up, definitely on a 4-hour chart, we're going to see the bulls going to climb up, which potentially, well, I think the first target we should be looking at this week is the EMA 200 averaging line, and that is going to be about 1765 or 1,770 US dollars per ounce. All right, 1770. And on the high side, if it goes higher, then 1780 will be our target. All right, so this is the 4-hour chart, and if we're going to turn back into a day chart and take a second look, all right, a second look on the day chart with the same trend line, and what will we see here? All right, now I think with this trend line, it is a bit pretty more clear that you would prone to believe that the prices are more likely to climb up than to go back down this week. But then again, I want to repeat, if the gold prices fall below 1730, then I think we have to abandon the long view for the time being. All right, and otherwise, I think on the top side, yeah, 1780, 1760, 1770, or 1780 is going to be right not too far away from your doorstep. All right, and the reason I emphasize again why gold prices will recover and people will be looking at that is because funds are moving out from the stock market due to a lot of volatility and uncertainty, especially on the rising bond yield. All right, that's the gold prices. And if you are very keen in looking at gold prices, although this is a OTOP, all right, OTOP means one target, one purpose. But out of the gold prices, I want to introduce just for you to take a look again at another secondary market. This is a 2 times leverage ETF, all right, called UGL. Okay, it moves and works exactly as the gold prices, but it goes up 2 times in multiplication if the gold prices climb. But on the other hand, if you go long and buy the gold prices, and if the market falls, then this UGL will make you lose 2 times as well. All right, these are 2 times leverage, so be very cautious on trading this UGL. But then again, just looking at this day chart very quickly. All right, earlier I showed you on the day chart on the gold prices, spot gold. If market were to go up, then I think UGL potentially from this current 56 level, all right, once it cross up and go beyond above the zero line in the momentum, I think coming up here to 61 is not that difficult after all. All right, so you can pay some attention on the UGL if you got interest and do some research on that, which I'm not going to talk a lot on UGL, but basically we are still focusing on the spot gold prices in this week, 22nd March year 2021, and that's for OTOP 33. All right, so this is the DOW world. Thank you for staying with us, and don't forget to share, right? Continue to share on this good video if you think it helps you, and if you like our program, come back next week and we shall continue on the next series of OTOP 34. See you right there.